Federal student loan payments and interest have been waived until September, but did you also know that your employer's loan repayment assistance contributions have also been changed in the CARES Act? Here's what the CARES Act changed for your employer's repayment of your student loans and how that impacts your taxable income. Hey guys, welcome back to the College Investor, Investing and Personal Finance for Millennials. So the CARES Act has obviously a lot of different provisions and changes to help us during this difficult time. And part of that included the loan repayment assistance programs and how that changes and impacts your student loan debt. So first, what are loan repayment assistance programs? These types of programs helps student loan borrowers repay their debt. So employers can participate in these types of programs to incentivize prospective employees and retain current employees. So if your employer participates in these types of assistance programs to help you repay your student loans, oftentimes there are some terms surrounding that agreement. If they agree to pay your loans, then you might have to have a certain number of years of service working for that employer, because what they want to make sure is that they get benefit out of paying off your student loans and making sure that you're not just going to up and leave that employer after they pay all of your student loans back. In fact, if you leave early and kind of bounce out of that contract, you may be on the hook to repay that loan assistance. This was what was in place prior to the CARES Act going into effect. In fact, that money that your employer paid either directly to you as a reimbursement for your student loans or directly to your lender, that money was treated as taxable income. So for a simple example here, if you made $50,000 in a year and your employer paid $10,000 towards your student loan, you're actually going to have a taxable income of $60,000. Once the CARES Act went into effect, there were a couple provisions that were put into place. So some language was changed, and this is what it looks like. So it says right here in section 2206 under the section B, in the case of payments made before January 1st, 2021, the payment by an employer, whether paid to the employee or to a lender, of principal or interest on any qualified education loan incurred by the employee for education of the employee, and they did a little amendment here in section B, the conforming amendment. They inserted the following: or for which an exclusion is allowable under section 127 to the taxpayer by reason of the payment by the taxpayer's employer of any indebtedness on a qualified education loan of the taxpayer. So what this means in simple language is that any of that money that is paid towards your student loan from your employer is now going to be tax-free, and this goes for the rest of 2020. No matter if your employer actually makes those payments directly to you in a form of reimbursement or directly to your lender, it will be considered tax-free. Now keep in mind that this only applies to that first $5,250 per year per employee as of right now. And as an employee, you don't need to do anything to make this change happen. Your employer doesn't need to make any changes. This is just automatic. And we're not really quite sure how this is all going to play out. You know, with student loan payments and that interest waived until September, plus the tax-free provision for any employer loan repayment assistance, we're just not sure how this is all going to shake out. Here's the thing: if you're still employed or receiving a regular paycheck and you have the means to pay down your student loan debt, do so. Every little bit counts, especially now when there's no interest accruing. You could really make some headway on your student loan debt if you have the means to do so. Now, for more information on student loan debt and more, be sure to visit thecollegeinvestor.com.